Cathie Wood just keeps buying more and more Tesla stock. This is from Wednesday and this is from Tuesday. This is $12 million and the other day was $11 million. As you can see, this is quite a bit more than usual. Usually it's only just 1 million, 4.6 maybe 3 million, 1.4, not like 11 million or 12 million each time. She believes in Tesla stock. She also just wrote this letter sharing her newest insights about this absolutely amazing opportunity that we are experiencing, as well as what to expect in the future. Cathie writes, in 2014, I founded Ark Invest for 2 reasons: to focus exclusively on disruptive innovation and to create a transparent research ecosystem designed to surface and share information on the convergences between and among the 5 major innovation platforms evolving today, involving 14 technologies. Those platforms are multi-omic sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. And guess what? Tesla is directly involved in robotics, energy storage, and artificial intelligence. These are going to be absolutely massive. In 2022, one of the most challenging years in market history. I would say, certainly not in history, but for growth stocks such as Tesla stock and innovation stocks, which are the stocks that Cathie focuses on, certainly that was quite a year. But you look at S&P 500, which is my favorite index fund, it was only down almost 20%. And if I just go back to 2008, that was quite a bit worse, a lot worse. But Cathie is not talking about the general market, I believe. She's just talking mostly about innovation stocks, growth stocks. She says that in her 45 years on Wall Street and more than 30 years in portfolio management, she has never seen markets this dislocated. When someone with this much experience is telling you so, you better listen. These are not normal times. A lot of things, I believe, are just temporary, like the buying opportunity that we are being presented with Tesla stock. Today, money supply is declining, commodity prices are deteriorating, bloated inventories are unwinding, and innovation is disrupting the traditional world order, all pointing toward lower inflation, perhaps deflation. This is what Elon Musk has been talking about now for a few months. And look at the interest rates that we are probably going to have in the US. Previous week, 99% chance that the interest rates would be at this level, and now there's a pretty good chance that we might have lower interest rates compared to what we were expecting. Look at this here. Inflation, at least for now, is clearly slowing down. There's no doubt about it. It's clearly slowing down. And if that continues and the rates do not increase anymore and perhaps even start decreasing, then, you know, everyone is going to come out from these cash positions and is going to put all of that money into equities and stocks like Tesla stock again. Notwithstanding the US Federal Reserve's Fed rhetoric, the bond market seems to be corroborating this outlook with 10-year Treasury yields in the 3.5% range and a yield curve that has not been this inverted in 40 years. Both metrics suggest that real growth and inflation could surprise on the low side of expectations this year. And when you have this inversion, recession? That's actually a good thing for Tesla. Not for Tesla stock short term, unless you love buying opportunities, which I absolutely do. I'm still loading up as much as I can. But for Tesla, the company, a recession, that's going to crush all of your competition. Tesla just cut prices in the US. It will sell every single vehicle it produces. It's going to be no problem. That said, plagued by fears of entrenched inflation and higher interest rates, the wall of worry in the equity markets has scaled to enormous heights, historically a positive backdrop for equities. Investors currently are holding high levels of cash, levels not seen since the 9/11 crisis in 2001, and are overweight in bonds for the first time since April 2009. If there is a mistake to be made in investing, it is to be in bonds in 2009 in April and to miss out on all of this huge growth just because you are scared. We reached the bottom roughly in March, and after that, it was all up for the most part. This last December, the Chicago Board Options Exchange equity put call ratio reached a record high, surpassing levels seen during the tech and telecom bubble and the global financial crisis. That is very bearish, by the way. Super bearish, meaning everyone is scared, everyone is thinking things are going to go down, it's never going to stop, this is over, we will never make money, we will never invest, we are scared, we don't want to do anything because then at least we don't lose money. Which is what most people or many people decided to do in 2009 in April. That was one of the worst decisions that they could have made unless they got right back into the stock market very quickly. Cathie then says, in hindsight, both of those times were terrific opportunities to put funds to work in highly differentiated strategies. I believe that the current market dislocation presents an opportunity for innovation strategies to thrive and equity markets recover. Fear of the future is palpable, but crisis can create opportunities. Disruption can surface in surprising forms and at unexpected times. Innovation solves problems and has historically gained share during turbulent times. This right here is one clear reason why full self-driving is going to be solved a lot faster than most experts think. Now, some people might be a little bit optimistic, but generally, the general consensus that the experts have that are not Tesla stock investors, I believe are going to be so wrong. Check this out. ChatGPT. Artificial intelligence, AI, is advancing at an unprecedented rate with ChatGPT, a version of GPT-3 optimized for conversation, signing up 1 million users in just 5 days. This uptake is particularly impressive compared to the original GPT-3, which took 24 months to reach the same level. ChatGPT already scores above the national average on the SAT. Can you believe that? This is crazy, demonstrating its potential to revolutionize the way we approach knowledge work. Write a rap song about Cathie Wood. Verse 1. Cathie Wood, a name you should know. She's the boss of Ark Invest. Watch her portfolio grow. She's a visionary, a true innovator, making bold moves, no hesitator. Cathie Wood, she's killing the game. Wow, this is crazy. This is, by the way, this is all unique content. Cathie Wood, she's killing the game in the stock market. She's making it rain. This is great. Oh, this is actually pretty good. Wow, in the stock market, she's here to stay. Cathie Wood is killing the game in the stock market. She's making it rain. This is pretty good. This has never been written before, by the way. This is completely unique. This is ChatGPT. Write a rap song about Cathie Wood being down in her fund, but Tesla stock soon exploding and multiplying by 10 times. Enter. Verse 1. Cathie Wood took a hit. Her fund was down, but she knew Tesla's stock was about to be the crown. She held tight. She didn't sell a share because she knew the growth would be beyond compare. Cathie Wood, she's a true believer in Tesla stock. She's a true achiever, and she held on tight, didn't back down, and now her funds multiplied 10 times around. Wow. Here you go. ChatGPT. If you are a rapper, you can now write songs in about 15 seconds. If you are not a rapper, you can also write songs in about 15 seconds. And it's actually pretty decent. Or if you need some inspiration, you can just write a song about yourself. Here you go. Take a look at this. So if you're feeling down, just remember Cathie's tale. She held on tight, and now her funds on top of the scale. She talks about electric vehicles here during 2022 in the US as auto sales dropped 8% on a year-over-year basis. Tesla sales increased 49%. During the past 3 years, Tesla's market share of total auto sales in the US has increased 240 basis points to 3.8%. Energy demand, this is interesting. Demand for crude oil may have peaked in 2019 at 100.5 million barrels per day, particularly now that electric vehicles are taking share of total auto sales and ride-hailing companies like Uber are partnering with rental car companies like Hertz to rent EVs. And this is the really good part. Hertz says that EV maintenance costs are 50 to 60% lower than those for gas-powered cars. According to Ark's research, thanks to their high utilization rate compared to personal cars, autonomous electric vehicles could lower oil demand by 25 to 30% to 72.6 million barrels per day by 2030, as shown below. This would be deflationary. And the ChatGPT is pretty good. Tell me a joke about a fund manager. Why did the fund manager break up with his girlfriend? He said she didn't have enough growth potential. Growth potential is one of the 48 reasons why I only own Tesla stock. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.